Hey, good afternoon, everybody. Welcome to 12-Minute Trading, our live market update. My name's Doc Severson, and over here is Dave Lukas of 12-Minute Trading. And today is Tuesday, the 3rd of January, so welcome to 2023. And once again, we have volatility in the market as we are seeing the S&P threaten to break below 3,800 one more time. It's tested that level 1, 2, 3, 4, 5, 6 times over the last couple of weeks. It is knocking, and we're not sure if it's going to hold. Hey, Dave, what do you see out there in the markets?
Same old, same old. We're still walking sideways. And forgive me, everybody, my voice is a little bit gone from cheering on Ohio State losing by 1 point this past weekend. I hope you guys enjoyed your New Year's long weekend and enjoyed some of those football games. They're pretty good if you're a football fan. So bear with me on my voice, but we've done nothing but walk sideways for the better part of 2 weeks on the daily chart. It's like train tracks, just walking along. And we're at a point where we're going to break out from that. And I think this week we'll have some catalysts, right? We've got the JOLTS numbers tomorrow, right? That's the job openings. So that's a mover of the markets. And then you've also got the Fed minutes, right? Which traditionally haven't moved markets that much, but they seem to do so more in 2022. And then Friday, we've got the non-farm payrolls number. So the big thing right now is this: inflation's coming down. At least the last two, prints on CPI have come down. And so that's doing what the Fed wants it to do. But the Fed has been adamant that they want to crush the jobs market. So the market's watching those numbers. And that's why, like, even last week, if you were paying attention, even though it was a shortened holiday week and, the algorithms were pretty much trading, but you saw that the unemployment claims last Thursday came in line. They were higher than the week before. Markets rallied on that. Why? Because they want to see softness in the jobs market. They want to see unemployment. So JOLTS will be a big thing that moves things tomorrow. And then I think by Friday, that non-farm payroll report's probably going to set the tone for where we go. The move that we have off that probably be the beginning of the next trend based on the fact that we've coiled up like a spring and we're ready to move from there. So that's kind of what I'm seeing out there. Doc, how about you?
Well, let me do let's let the charts do the talking here. This is the S&P 500 chart. And what I've got here is I've got a triple fractal. I've got monthly time frame over here. I've got weekly time frame here. And then, of course, we've got the daily on the right side. Don't get confused. If you follow Dave, he does it the opposite way. So we have to do things differently just to be unique. All right, so notice what's going on here is that each one of these, that we have a very high energy level. You can almost view this like a fuel tank with full and empty. Now, full comes from non-linear price action, means that it's just banging around up and down, up and down. It's going nowhere. And essentially, the price is really, from a net basis, gone nowhere on the S&P in several months, even though we've had tremendous volatility. We've had, 2 bear market rallies since the summer, followed by, one heavy distribution plunge, and we're halfway through one right now. We're not sure where this is going to end up, but notice also what's going on here with a weekly chart. High level of energy. It's a full tank and ready to go. So it's like you're pushing a very heavy weight to the top of a hill. You've loaded that boulder with potential energy, and it releases through what's called kinetic energy. We all remember this from physics back in high school. So we have the same thing going on in the daily chart. So all 3 time frames are showing massive amounts of nonlinear price action, meaning that we've got this fractal relationship between the 3 time frames are showing essentially the same thing going on here. So this is one of these conditions where within the next couple of days, and I would say by the end of this week, we're going to see a relatively strong move one direction or another. Or it could even do something like this where we rally up the first couple of days of the week and then we lose it to the downside. Either of those could happen, right? So we could even do something like this. We just do not know. There's so many landmines in the market right now. So the way I normally try to take care of something like this is through what's called a long iron condor. So normally what we're doing is we're selling trades outside of these ranges here. Like we're setting up call credit spreads and we're setting up put credit spreads down here, and then the price stays nicely within the range and we collect the premium. We're still doing those trades. However, there are times where I will set one up the opposite of this. So the price has to move. So you can think of something like a straddle, but it's just a little bit easier to manage for something like that. So now is the time to be putting these types of trades on, because I don't think this price is going to stay in this range for much longer. So there we go.
Yeah. And Doc, while you've got that up, what you see there is basically, and you can pull it back up actually if you want, because I'll talk about it and people can see that. But you've got yourself basically what looks like a bear flag, but it's really just a sideways triangle, and that's the hardest triangle, right? Because you can have uptrending triangles, downtrending triangles, and usually you break the opposite way. A sideways triangle, you don't know which way it's going to go. It coils and coils, and then all of a sudden it breaks either direction. And it's going to be on the news this week, right? The markets are future-looking instruments. They're going to trade off what they think the future will be. That's why the jobs numbers are just so important this week. And so that's something to really, think about as you're looking at this. Don't be too hasty on this, right? Let the chart reveal the trend and then play it, right? I mean, you don't have to try to time it or call it. It'll show itself to you. And I think that's something that, especially right now, because the move that's going to come out of here is 150 to 200 points on the S&P. And so that's the time to just kind of sit back. I mean, we're doing trades, right? But, we're kind of keeping our powder dry and just saying, okay, which way are you going to go? And then I'm going to, take advantage of that. And so, yeah, go ahead, Doc. You're showing some good examples on the screen there.
Well, here's an example from 2011. So this one's from 11 years ago. And believe me, you tend to remember stuff like this. So when we saw this double bottom, and I love these double bottoms with an undercut. So the undercut, what it does is creates a massive amount of sadness down here. So everybody just gets, oh no, and they just completely lose it, right? And so the negativity, somebody steps in. Not only the bears are covering down here, but also the new bulls will accumulate down at this level because they love to do that. And it's also a longer term trend line. So we had a really nice rally over a couple of weeks, and then we pull into this beautiful consolidation, which shows exactly like what you were talking about. It's almost exactly what we have, and same amount of energy and everything like that. Everybody on the planet was looking for this to break higher. Everybody. And when everybody sees the same thing, this is the type of thing that happens. They catch them all off guard. The trapdoor opened up out of this pattern and went straight down. Now, when everybody gets bearish down here, like, oh no, we're going to retest these lows, and that's exactly when we started to lift off. And this gave us, I've lost the move here, but this gave us one heck of a move. Let's see if I can find it again. Yeah, it's somewhere around it. There it is. Okay. That was quite a move that we had from there, and it just kept on going. So anyway, those are the kind of things that happen if you go back to today's. I mean, look at this pennant here. I mean, this thing is crazy. So this will break in a way that most people do not anticipate. And so this is why I'm saying be very, very careful this week, because we could get a double break. We could get a fake out move to one direction and then completely turn around and move in the opposite. Because again, we have, like Dave says, we've got the JOLTS report tomorrow. We've got Fed minutes. We've got the ADP report on Thursday. We've got the main jobs report on Friday. For a 4-day week, we've got an awful lot of event risk packed into this week. So we are treading lightly this week in our services. We are going, we're trading 2 days out of the 4, just trying to keep folks safe and secure, and that's what we do.
Yeah, and the other thing too is, like I said, you got to just let it break and show you the way it's going to go, and then take advantage of it. If you like to buy calls or puts, just let it break and show you, because it's going to run once it does. It's going to run, like I said, 150, 200 points on the S&P. So you can buy calls at that point, buy puts at that point. If you like to sell, you can sell it. You can sell and follow it up, right? If it breaks to the upside, you sell put spreads, follow it up, or sell puts and follow it up. Conversely, on the call side too. I think the key right now, and it's something to watch into the end of the day, is, Doc, do you have like a 5-day, 15-minute chart as a standard to pull up there with the energies? If not, I can do it on my screen. But right now, this 3,800 level has been very, very key. There it is, 5-day, 15-minute. Pull that up. And so you can see where we're at on this thing. Do you have the energies on this? Can you apply the fractals to it? Apply yours to it?
I can. Yeah, let me go over to the...
It may look a little different than mine, since mine is a little bit different time frame, but we're getting a rally right now. And that's what I wanted to point out is this thing was coming into this session with us today. This thing was coiled up and ready to really ready to rock into the final hours of the day. See the energy given away, just starting right there, and see the spike we get right now happening, the tick on the far right. You can see that energy dropping down and that going. That's the move that I've been watching into the end of today to see if we hold 3,800. And we keep getting down there, and the buyers keep stepping in. So for now, right now, to me, that's signaling that this is holding, and that we may see some upside if these numbers come in any way good. Right. But you can see that energy right there on the 15-minute chart was up, charged about 60 right there at the bottom. And now it's giving way. And here we go. 30 minutes still kind of going sideways. But you can see big rally. We just tested when we started this meeting, we were at 37.96. And now we're back to 38.20-ish, right? In the span of just a few minutes. So that's that. If you look at intraday, I love watching like the 5-day, 5-minute, or the 15-minute, 5-day, or even the 10-day, 30-minute. Those are great charts to watch get charged up, and then watch for them to break intraday if you're a day trader, and play those. So I loved seeing this break higher off of the 3,800 level. That's another good sign that at least the algos are still holding that level. So.
Now, one thing I wanted to, you might have just heard a trade fill there. This is a trade that I put on earlier today, and this is called a broken wing butterfly. And I play these on a 0 DTE basis, so 0 days to expiration. And so I played this originally up here closer to like 38.25, as I thought we were starting to see a bounce earlier today. And it plunged all the way back down, but you'll notice on this trade, it's limited risk, and there's also kind of a nice profit peak in this area near the end of the day. So what I like about this trade is I've got a good cushion for success. We just closed out for a profit of $60 per contract, and really I had to do very little for this trade for it to win. So these are some of the trades that we like to play, and it may be something I'm going to look at incorporating into 12-minute trading down in the coming year, is some of the 0 DTE opportunities. Not quite sure how to do it just yet, but we will get there. We will get there, because there's so much going on in the world of trading. There's so many things that are changing. And even the thing that you brought up to my attention today in terms of the robo trader and stuff like that. So
there's all kinds of things out there. A lot of people trying to create ways to automate everything. I still think there's skill that's needed and everything, but that's something that we're even looking at with our service. How do we bring more automation? How do we make it even easier for students? How do we take a lot of the guesswork out of it and everything? And so part of that's simplicity of the strategy, right? The more that we pile onto a chart, the more complicated we make things, the more we trade, the more actually you lose. And the stats show that, right? So it's about being consistent, disciplined, and simplifying everything. And that's kind of what I love what we've done with these strategies. You do one chart, one trade a day, very systematic, and it's got a high win rate, and it's considered. It's like I love my double trades. I put those on, every single week, and then there's not much I have to do but let time just go to work for me. And within a couple weeks, I'm out of those suckers, making a nice 4 or 5, even 6, 7% return on risk, and then turn around and do it again. So there's something to be said for that. I think a lot of people get caught up in going for these home runs, and I think maybe some advice to start the year, especially because we're still in a bear market, is it's hard to get the home runs. It's hard to get them in a good market, let alone a bear market. So if you can discipline yourself just to, go after base hit after base hit after base hit, that adds up to those home run like returns, you're going to do really, really well for yourself. And I think we proved that with our strategies last year, and I had a student email me the other day, up 22%, just using the double strategy for the year, right? In a bear market where everybody's down 40, 50, 60%. That's what we do this for. It's awesome to see people have that success like that. So,
I've talked to,
that's my advice to start the year.
I don't know how many hundreds of traders that I've talked to since 2005. I mean, I put in my notice, I started trading by myself in 2005, and it was kind of like, wow, is this all there is? I just, because even at that time, they were just bringing on weekly options back then, just barely bringing them on. Everybody's like, well, what do we do with these things? Because we're so used to trading monthly options. Imagine that, like only a monthly expiration. There's only 12 per year, and that's it. So we made it work for us, but there was a lot of downtime back then because it's like you'd set up these big positions and then nothing would happen. And so all of a sudden I found people knocking at my door like, hey, can you help me? Because I'm trying to do what you did. I'm trying to quit my job. I can't take this anymore. And, and it's like, oh, okay. And what I found is over the years, I've literally talked to hundreds and hundreds of people that I work with. And I would say 99.9% of them, when I had asked them, like, what do you want? What are you looking to achieve? What do you want to accomplish? And they would give their collective left arm for consistency.
Yep.
They want consistency. They want to get good at something. They want to be able to have some kind of positive expectation. I remember having a conversation with a dentist a number of years ago. And he asked me, he said, hey, doc, okay, so if I go through this educational program, what kind of guarantees do I have that it's going to turn out to be something? And I said, none. It's all up to you. It's all up to you. You're going to have to make something happen with this. He goes, the reason I ask is, I put 7 years of my life into going to dental school, and I knew that there was going to be a payoff at the end of that. And I'm like, well, it's different here. You can't just have a piece of paper that says that you can trade. You have to earn your way. Right. Here's your completion certificate. Right. Exactly. You have a license to trade. Yeah.
You're a trader now.
But it's not like that. So it's you got to be one of these people that don't want that, because if you want the same thing as everybody else, you may as well just take your 3% money market fund and be happy with that.
Yep.
But people are not happy with that. That's why they go into trading, because they want to make something. But the quickest way to do that is to focus on one thing only. So the people that are out there willing to give their left arm for consistency, they're answering their own question. All you got to do is find one thing, one chart, one strategy, and dedicate yourself to it. And it's amazing how fast that you can turn things around if you cut out all the clutter. Meanwhile, most of us are out there trading, trying to, work 60 stocks in our watch list, going through 86 different strategies. You'll never, achieve what you want to do with that.
Well, speaking of that, I mean, look, I'll highlight you and give you some kudos, but there's some reality to this too. What'd you end the year at with target 100s? 94% win rate, 95% win rate, somewhere in that range. And, they're high probability trades, but they do have a risk that, because you're making a small amount, right? And you're doing that over and over and over again, it adds up. But if you have a trade really go against you, it can knock out a lot of those wins. So the discipline in that trade is not, and the consistency in that trade is not so much entering the trade, it's the defense of that trade, right? You had to take a few where you exited, probably didn't, when you looked at it in hindsight, didn't have to exit, probably would have won the trade. But when you exited for maybe what, a day or two's worth of credit that you had received, and you're right back in the game. And I think that's critical, right? I think when somebody hears a 94, 95% win rate, they're like, oh, it's golden. Well, yeah, it's a pretty golden strategy. And, I love doing it too. I do it every single week. But the key is, to understand when you've got very low risk, right? Your returns are going to be a lot lower, and your risk of loss, if you are going to, have that 2 or 3% of the time where you could lose, is a lot higher. So speak to that, because I think that we need to be real about this, but I also think that the strategy is an awesome strategy for any market.
Well, it's like a set of scales, right? Everything finds its own balance. If you want something, most retail traders want a super high probability strategy. Like, hey, Doc, what's a strategy I can win 99% of the time? And I'm like, okay, you can sell, literally a mile away, but what's going to happen is if you run into what's called a fat tail event. So it's one of those like every 4-year type of scenarios that comes along, which can wipe out an entire account. I troll around the internet. I go through things like Reddit and Twitter and things like that. And it's just shocking when I see some of, they call it loss porn in Wall Street Bets, where they post like, hey, look how badly that I screwed up my account. And it's almost like a contest to see who can do that. And that's exactly what
real
happens.
Quick, before you go off of that, there's a video circulating from TikTok right now. It's on Twitter and everything. Some guy in Vegas, he's working at Subway now. He lost $2 million last year in the markets. And it's like, wow, great that you shared that. I mean, man up, share that sort of thing. But how did you let yourself lose $2 million? I mean, it's like doubling down times what it tells me you didn't have any rules. I'll tell you that.
Right.
But sorry, go ahead. It's amazing when you see these things.
It's the old answer, like, how do you make $1 million in the stock market? Start with 10.
Lose 2 million.
Yeah, start with 10. So, but the thing is that, most people think, wow, if I only had the capital, if I only had $1 million, I'd be set. No, that's not the answer. It's not the answer. It's the same thing, right? It's getting good at something and then allowing that to work out for you. But the balance I was talking about is you can balance this any one of a couple of ways. If you want higher probability, then you have to be willing that when you do lose, it may be a little bit more than what you want. Right. So what you can also do is you can go to the other side. You can drop your probability of success for the trade, which is not intuitive to most people. But by doing so, you can increase your reward to risk. Actually, some of the most famous traders that are out there, if you want to consider some of the turtle traders, which was an experiment put on, and they actually sort of made a movie out of that with trading places, right, with Eddie Murphy and Dan Aykroyd. So that was in the early 80s. So they did this experiment with the turtle traders in 1984. And they took people off the street. Basically, they had to apply for this, but basically nobody with any market experience. And some of them went on to become excellent traders. And the way that they did that was using a very low probability trend trading based, like Donchian channel breakout kind of strategy, where they would only win 30% of the time. But if you got your meat hooks into a real big trend, you're in while everybody else is like, gnashing their teeth, and you got in at a great price. And that's, so I can show you a strategy that wins, 10% of the time, but is, makes awesome gains when you get in, but people want to start the other way. They want to start with high probability. And so what we try to do is we try to show both ways of doing it. And, let the trader find their own sweet spot in terms of what gives them confidence.
Yeah, I think if somebody's new, or so even if you've traded options for a while, I think, the target 100 strategy that you do on a daily basis is a great either addition to what you're already doing, or a great thing to just build nice cash flow. I think the key to it always comes down to that discipline of defense. You've got some great rules around that and stuff that people, again, if you just follow them, it pans out, right? And I think that's the key, especially going into this year. It's going to be another volatile year by all accounts. I don't think anybody knows what's going to happen. Every guru's got a different take on it from what I've read. So nobody knows what's going to happen. So I think a strategy that, gives you the ability to take advantage of a market no matter what it does is great. But it's the rule set around it. So hope people take advantage of your trial and stuff that you got out there, because I think that's a good way to go and start the year. But
yeah, I think that's in the description
what I'm saying for this year. Yeah. So, but yeah, guys, I think, there's going to be a breakout coming here in the next probably 3 to 5 trading days. So by the end of this week or early next week, you're going to see a pretty decent breakout. This energy is going to give way, and it's going to go running in a direction, like I said, 150 to 200 points on the S&P. On the NASDAQ, that's probably 400 or 500 points. The Dow, maybe 800 to 1,000 points. And so just be patient and let things play out this week, and then take advantage. You're going to have a great opportunity to kick the year off with, if you do so. So
yeah, we've come from this mindset of you've got to predict the future, and you've got to get in front of the market, and you've got to, you got to find that next needle in the haystack. And we're not about that at all. We're more like, okay, which way does the market want to go? Okay, let's let it break out, and now we're going to hit it. Let the market
I don't want to play
you.
against the big guys.
Yeah.
I do not want to go against the big guys in the quant. I can't. Look, these guys are running fiber optic lines to their offices so the trades execute a half second faster. You can't compete with that. What you want to do is play in the margins where they don't. And that's how our strategies are kind of set up, just to play in those margins, right? You don't want to be right. If you try to be right, you're going to be wrong most of the time, if not all the time. So don't think you can beat them or be better than them. You're not going to be Goldman Sachs, right? That's not, as an individual trader, that's not you're going to be, right? So try to play in the margins where they're not, and you'll do really well.
Yeah. I mean, maybe we should end on this quote by Sun Tzu, but you never want to do a mass frontal assault against a well-entrenched enemy. Right. So that's asking for trouble. I mean, if you think about like what we did in World War I, we would just send thousands of these guys against a well-entrenched enemy and wonder why we lost 20,000 guys. You always flank. We do flanking moves. This is basically what we're doing is we're letting the big guys, thrash it out head to head on that. And we're just going to fit in the side door and just do what we do as retail traders. Look for an edge, look for that niche.
It's a perfect way to end it. So hopefully you guys got a little bit out of this to kick your year off, got little things to think about, get ready for some fireworks here going into, probably next week, end of this week, next week. And we'll be back, next Monday now?
Next Monday, finally, week
coming up.
We're back on a normal schedule. Yeah. So, hey, make sure that you hit the little subscribe bell on here and hit notifications as well, too. So when we're going to be on here live next, as well as our market minutes, which we do a couple of times a week as well too. So yeah,
if you like this, hit the like button, share it with others and stuff. We want to help grow this channel this year, let more people know about what we're doing and what's out there, and appreciate your help doing that.
And let us know if there's any questions you'd like us to address live here on our session. So looking forward to it. We'll see you guys next Monday. Thanks, Dave. And
thank you guys.
We are peace out from 12-minute trading. You guys take care. Have a great Tuesday, and welcome to 2023. Bye.